What if I told you there's a new form of money that lives on the internet, allows you to be your own bank, and has the potential to change the world? In this video, we're going on a journey through the evolution of money itself, from seashells to silver coins, all the way to the virtual coins of crypto. Our money story begins thousands of years ago, when the first currencies emerged as a way to make trade easier than bartering. Seashells, beads, and even livestock served as early forms of money. Then in the 700s BC, the Lydians of ancient Greece invented the first official coins made from electrum, a natural alloy of silver and gold. The birth of coins revolutionized commerce and meant you no longer had to schlep around a flock of sheep to pay for goods. Over centuries, coins evolved into paper bills backed by the gold standard. But in 1971, President Nixon ended that, meaning the US dollar was no longer tied to the value of gold. Wait, what? That basically meant dollars could be printed without finite resources to back them up. This brings us to today's world of fiat currencies, which aren't backed by commodities like gold. Many people started to question the system. Can governments really just create money from thin air? Shouldn't money be decentralized and limited in supply? Enter stage left, cryptocurrencies. In 2009, an anonymous person named Satoshi Nakamoto invented Bitcoin, the first decentralized digital currency powered by something called blockchain technology. Instead of a central bank or government, math secures the network and controls the creation of new Bitcoins. Suddenly, the idea of internet money not tied to any country became a reality. Bitcoin inspired a wave of other cryptocurrencies like Ethereum and Dogecoin. This new asset class ballooned into a trillion-dollar industry. But does crypto live up to its hype as digital gold and the money of the future? Well, prices are notoriously volatile, which makes crypto risky. Its decentralized nature also attracts cybercriminals. However, crypto is here to stay and continues to see growing adoption. Major companies now accept cryptocurrencies as payment. Even countries like El Salvador have made Bitcoin legal tender. While the future is uncertain, crypto's influence on finance and technology can't be denied. Much like the evolution of seashells to coins to paper bills, crypto represents the next phase in the epic journey of money. Now that we've gone through a crypto crash course, let's dive deeper into how this digital money actually works and its potential impacts on the economy. Cryptocurrencies run on distributed ledger technology called blockchain. This is essentially a decentralized database that runs across a network of computers. The blockchain records and verifies every transaction made, without the need for a middleman like a bank. When someone uses cryptocurrency to buy something, that transaction is submitted to the blockchain network. Crypto miners then use specialized computers to race to verify and group these transactions into blocks. The math that secures the blockchain is incredibly complex, making fraud and hacking attempts super difficult. This novel technology eliminates the need to trust a third-party authority to oversee transactions. The code itself acts as the authority and accountability. Proponents argue this not only saves costs but gives individuals more autonomy over their money. However, regulatory bodies are still playing catch-up. Now let's shift gears to crypto's influence on the larger economy. As a new asset class, cryptocurrencies provide an alternative way to store value, hedge against inflation, and diversify portfolios beyond stocks and real estate. But again, the extreme volatility makes crypto risky. The crypto market crashed in 2022 and wiped out over $2 trillion in value. Ouch! However, crypto has made a subset of society ridiculously wealthy. There are tales of Bitcoin millionaires created overnight. This sudden wealth transfer opens up questions around inequality. But crypto also holds promise to expand financial access to underserved groups, once barriers to entry are lowered. Some even argue Bitcoin could disrupt the hegemony of the US dollar as the global reserve currency. Given America's massive national debt, the dollar faces long-term threats to its purchasing power. Could crypto offer a more sound alternative? Regardless, fiat currencies and crypto will need to coexist and adapt as the landscape evolves. In the battle for the future of money, crypto takes a revolutionary approach. While the full implications are uncertain, it's clear these digital assets are changing finance and forcing important conversations around the shortcomings of traditional economics and governance. Let's dive into some of the major cryptocurrencies beyond Bitcoin and what gives them unique utility. Ethereum is essentially a decentralized computer network powered by its currency Ether. Unlike Bitcoin, Ethereum enables smart contracts and decentralized apps to be built and run on its blockchain. This allows for financial instruments like crypto tokens, as well as NFTs, decentralized finance apps, blockchain gaming, and more. Next up is Ripple and its XRP token, which is designed to facilitate fast global financial transactions and replace the SWIFT interbank network. Ripple has partnered with banks and payment providers to provide frictionless transfers between different currencies, both fiat and crypto. Cardano is another smart contract platform similar to Ethereum. It claims to offer greater scalability, security, and sustainability through its proof-of-stake consensus mechanism. The ADA token fuels the Cardano network. Polkadot was created to allow different blockchains to seamlessly share data and transactions through its main relay chain. This interoperability aims to significantly expand capabilities between chains. Its DOT token provides governance over the network. Stablecoins like Tether peg their value to real-world assets like the US dollar to minimize volatility. This allows crypto traders to hedge against risks. Stablecoins provide easy fiat on-ramps and off-ramps from crypto markets. Meme coins like Dogecoin and Shiba Inu took the crypto world by storm. While they often start out as jokes, they can gain real traction and value. Part of their appeal is allowing regular folk to own millions of a cryptocurrency for starters. This just scratches the surface of the crypto coin universe, which continues to rapidly expand. Each new creation offers unique capabilities and trade-offs. But within all this diversity lies blockchain's potential to transform just about every industry. The innovation race is on. Let me know in the comments your favorite crypto coin and how you think it will change the world. On the bright side, crypto offers an alternative to traditional finance and investment options. It allows you to be your own bank, send money seamlessly across borders, and participate in decentralized networks. Crypto also enables new models of governance, fundraising, and ownership through tokens and blockchain technology. And if managed properly, crypto may hedge against inflation better than cash or bonds. However, crypto remains highly speculative and volatile, making it risky. Most people treat it as an investment rather than a currency. There's no FDIC protection, and if you lose your private keys, your money could be gone forever. Crypto tax implications are also murky at the moment. More fundamentally, crypto's decentralized nature comes with drawbacks too. With no oversight, crypto networks are vulnerable to hacking, fraud, and manipulation. The energy consumption required to mine certain coins has environmental impacts. And without regulation, crypto makes illegal activities easier. So whether crypto should be part of your personal finance strategy depends on your risk tolerance and values. Here are a few guidelines to consider. Only invest money you can afford to lose. Be prepared for wild price swings. Diversify across various crypto assets as well as traditional investments. Use secure storage and safe practices to protect your coins and keys. Understand the technology, costs, and risks associated with any crypto before buying. Consider dollar cost averaging rather than making big one-time purchases. Skepticism about crypto is healthy. As with any new technology, there are pros and cons, but we're still early days in terms of adoption. As the space matures, regulation improves, and innovation continues, crypto's advantages may start outweighing the risks for more people. The key is educating yourself so you can make informed decisions rather than FOMO buying the latest coin. As cryptocurrencies continue maturing, a fascinating trend is emerging. Actual nations making moves to integrate crypto into their economies. Let's look at some leading examples. El Salvador made headlines in 2021 as the first country to make Bitcoin legal tender. Citizens can use the crypto to pay for everything from groceries to haircuts. The government even launched a national digital wallet called Chivo. President Bukele touts crypto's potential to increase financial access and power economic growth. The Central African Republic has also adopted Bitcoin as legal tender and an official currency. The CAR faces heavy economic challenges as one of the world's poorest nations. Crypto offers potential to boost international trade and provide financial services to more citizens. Singapore typically takes a cautious regulatory approach. But even they've embraced crypto innovation lately. Top Singaporean officials say crypto can expand financial inclusion if risks are properly addressed. Switzerland has emerged as a European crypto hub with crypto companies drawn to its business-friendly laws. The city of Zug even accepts tax payments in Bitcoin. Regulatory clarity makes Switzerland a welcoming environment for crypto entrepreneurs. Estonia is another crypto leader. using blockchain to boost governance and public services. Most Estonian citizens have a digital ID card, allowing access to online platforms that use blockchain to verify identity and records. Of course, many governments remain skeptical. China and India have both imposed heavy restrictions on crypto transactions within their borders. But overall, global sentiment seems to be warming to the potential benefits while still addressing risks. The countries adopting crypto are placing bets on the technology's capacity to optimize financial systems, reduce corruption, and expand citizen empowerment. But integrating crypto requires revamping legal frameworks. As pioneering nations test the waters, regulatory evolution appears inevitable. Crypto is certainly no longer just an internet fad. Real economies are beginning to embrace digital currencies, and early movers want to be at the forefront. While risks remain, innovation can't be restrained. The rise of crypto economics presents fascinating opportunities to learn from and improve. And that brings us to the end of our cryptocurrency journey. Let's recap some of the key ideas we explored. We traced the evolution of money from ancient coins to modern fiat currencies. Cryptocurrencies emerged as a decentralized digital money system, with Bitcoin paving the way in 2009. The blockchain technology behind crypto enables peer-to-peer transactions without centralized control. This innovation has spurred both enormous investment and speculation. The crypto market has seen wild price volatility, with traders looking to capitalize on swings while true believers see digital currency as the future. Cryptocurrencies have introduced new models of finance, governance, fundraising, and ownership. Different crypto coins each have unique utilities and capabilities driving adoption. But there are also environmental and regulatory challenges to confront as the technology matures. While the future is uncertain, crypto's influence is undeniable. It offers an alternative to government-backed money and traditional finance. Crypto empowers individuals to control their own wealth and participate in decentralized networks. But risks remain which merit education and prudent strategies. The key is to approach crypto with an open yet critical mindset. There are reasonable arguments on both sides regarding crypto's benefits and drawbacks. Maintaining skepticism while also embracing new innovation is important. Money has evolved throughout human history and will continue to change shape. Where crypto goes next on its journey is still unknown. But we can look forward to this grand experiment in decentralized digital currency, continuing to challenge norms and inspire new possibilities. Thank you for watching. Let me know your biggest takeaway on crypto's present and future trajectory. Please like and subscribe for more educational videos.